Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Sales International Limited. And here is your weekly technical analysis of LME 3-month copper, aluminium and lead. However, before we start, I just wanted to let you know that no AI, that is artificial intelligence, was ever used in the composition, production or recognition of any of these patterns, levels, analysis or any related items on these my charts. This was all authentic intelligence, all my own original work, as I think you deserve to have that. So with that,
LME 3-month copper. In January, I compiled and published my annual video commentary on LME 3-month copper. Please look at the YouTube index for ADM ISI to find it. In this, I looked back and found a very relevant technical pattern for the actions seen since mid-December last year. That key piece of evidence recreated here on this daily chart is the bright red 2009 to 2016 bullish shift pitchfork, and the specific key piece is the bright red upper time, currently at 13,401. That sits just above the top of the market, of the very recent market, and has capped, despite being significantly pierced on one occasion, has capped a number of significant thrusts higher seen in January and February, and even very early March. Indeed, this is the key piece of overhead resistance and only piece of overhead resistance seen here since the break up and out of the very recent showrunner for this market in mid-December last year, the July 22 to January 23 shallowy bullish shift pitchfork. So this leaves us with the question, what now? Well, 3 weeks ago I said there were two possibilities, with one having a subplot and none of them really satisfactory. The first was to look at the whole 2026 action so far as a complex top, and the best we had as a proxy for a neckline was the 50% Fibonacci line November 25 to January 26 move at 12,571. The subplot to this was we also had a multi-bottom diamond pattern formed between late December 25 and the start of March 26. It was not an easy diamond pattern, though we did see prices drop down below the 50% Fibonacci line at 12,571 and achieve the primary target below, if not the secondary hardest reach target further down. The second possibility was to look at the whole 2026 action as a possible bullish halfway hesitation, running from as far back as mid-November 2025 action. I said back 3 weeks ago, and I quote, "To be honest, this is even more unlikely, but I would be churlish in not mentioning it as a possibility." End of quote. And though prices are now once again rising up to the bright red upper time, I do not credit this idea with the incentive to start such a move, and will now consign it to the vaults. And thus, we have finished most of one pattern idea and are now on the hunt for the next one. This, I believe, will center around what the market does at the bright red upper time, which seems to be where the market wishes to go right now. LME 3-month aluminium. The market's break higher in early January started a move that continues, well, sort of till now. It helped at the time to identify a large pattern, not a very defined pattern, but it has previously been breached on the upside. Plus, it may not have the required number of touches per side, but we seem to have an April 2025 to date very large, bright green rising expanding wedge pattern, which is currently 3021 to 3513. Yesterday we yet again breached the top side of this pattern. I'm looking to see if the market will now stabilize over this breach, or at least stabilize better than it did during the previous breaches in late January plus early and middle March. Only then would I consider looking at potentials or targets further above. These moves allowed me 5 weeks ago to draw a new mid-December 25 to start of February 26 bullish shift pitchfork, which I hoped would show the bullish angle of attack. However, the market has instead, for the moment, chosen to show a newer dark blue late January to mid-March bullish Andrews pitchfork to show the actual and more acute bullish angle of attack. Instead, I of course would be happy to morph this into a shallower bullish shift pitchfork for the same move, should circumstances dictate such a move. But for now, this dark blue bullish Andrews pitchfork seems to be the showrunner here, with prices, well, just above, but in between the dark blue middle time below, which is just above it now. That's currently at 35.46, and a dark blue upper tine above, further above, currently at 37.92. Another feature to watch for, and one that became evident to me on my longer term chart when compiling the annual video commentary, which you can find on the ADM ISI YouTube channel, is a very large November 2015 to April 2020 bullish Andrews pitchfork, which I've transposed onto this daily chart and highlighted in purple. The nearest part is the purple middle time below, and that's currently at 34.34, which was the base of the support for the past 2 weeks, and indeed opened the door to looking at the whole mid-March to date action as a possible bull flag pattern, despite the gap 2 weeks ago. This is obviously not certain as yet, but I can indicate possible potentials, not targets yet, but potentials, of indeed a primary potential that has already been achieved in the 36.06 area, and a secondary, harder to reach potential up in the 38.08 area. So what do we have overhead that can possibly interfere with this idea? Well, in truth, not a lot. We have some highs from March 2022 up at 36.60 and again at 37.42, but there is nothing much overhead until the March 22 high, which is just over the top of my daily chart at 40.73. It may be that if prices continue high, then I will have to draw some projected Fibonacci lines. LME 3-month lead. Back in mid-January, the market tested up and failed at the 50% Fibonacci line of the May 24 to April 25 move at 20.98. Indeed, I think this 50% Fibonacci line also caused the high seen back in November last year, as well as the earlier this year high. Since then, we've pulled lower, down through what were the close-knit moving averages. In the process, the market created a small January-based head and shoulders top, breaking below the dark blue neckline, which is currently at 19.85 in late January, and easily reaching the primary target, but taking its time in reaching down to the harder secondary target. However, in the process of taking its time to head lower, the market did create a bearish cat's ears pattern over February and reached down to the primary and secondary targets for this pattern during March. Interestingly, that actually happened mainly over just 2 days. We've since overshot on the downside, but in mid-March, prices developed a bullish reversal, a horn bottom over 3 sessions that started a pullback up. This pull upwards has now started to run into 2 pieces of resistance. The first is a fairly static piece based around the lesser Fibonacci line at 1939, which caused the low back in December last year. The second is more dynamic, as it is the declining green short-medium moving average, currently 1947. I will be curious to see what happens when these two meet, which should be sometime next week. Because if this market wished to break these resistances, then there would be no better time than when they intersect. Further up, we have the bright red neckline, currently at 1967 of the August to December 24 head and shoulders pattern, that acted actually as an attractor during February, plus a little higher, the 50% Fibonacci line at 1971 for the whole 2025 move. This brings me to my final point. It's a point I've been making here since the start of 2025 and will continue to do so going forward. It has been and still is to me the most important point of all. So at the end of December 2024, we saw that 2024 had created a very large and rare annual key reversal down in LME 3-month lead. We haven't done that much since, until very recently. And indeed, prices are only about $20 lower today than they were at the end of 2024. Now, this is not an endorsement of the annual key reversal down, but neither is it a strong countermeasure or repudiation of it. Hence, I still say, even now, with prices where they are, that one should still look at all things going forward in this year, in this coming year and beyond, in this metal, in the shadow of this longer term bearish pattern.
Thank you for watching and listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.